Hi, my name is Dr. Mario Wallace, and welcome to a basic understanding of profit and loss or an income statement for a small business. So most small business owners have bookkeepers and CPAs who manage their books, their finances, and that's fine. But the problem comes in when these small business owners have to interpret his or her own finances, right? To be able to talk to investors, lenders, and so forth. And this is where the trouble comes in. They tend to not truly understand their numbers, and it never makes sense in those type of conversations. So they're not effective in communicating their finances to an investor or to a lender in order to help them move their business to the next level. In this lecture, I will cover a few things that can tweak and help you to understand how to effectively look at your numbers, interpret your numbers, and to articulate the best conversation when talking to an investor or a lender, or just looking at your financials yourself weekly for at least an hour or 20 minutes to an hour to understand the growth, the profitability, and the spending of your actual business. So take a look at the screen. This is actually a profit and loss statement for a small business, or we can name it or term it an income statement. The income statement is broken up into two parts. The top is the direct cost of doing business, and the bottom is the direct cost of doing business. The top of this income statement of P&L, you see total sales or sales, and you see cost of goods. Let me explain. The total sales is the amount of revenue that the business generated that month or that year, the total amount of revenue, monies that came into the business through sales throughout the entire year. Underneath it, you see cost of goods or COG. COG is the money, the direct money spent on converting raw resources into a product. So the supplies such as lettuce, tomatoes, onions, pickles, ground beef, cheese to create a cheeseburger, and the direct labor associated with converting that raw resource, those raw resources into an actual cheeseburger. And this goes for any other business, such as hairbrush business, and you have to take actual wood and carve and design the actual wood, and then put the bristles into the actual brush to actually create the actual product. It's the same thing as taking lettuce, tomatoes, and onions and cheese and creating a cheeseburger. It's taking the supplies needed to create the actual brush, and the brush is an actual product for sale. In this actual P&L, you see parts, inventory, direct cost associated with the cost of goods and the actual labor that is considered that help to convert the actual raw resources into the actual product. And you see 25% of direct labor associated with cost of goods. Now, at the top of this P&L, you see sales, and then you see the itemized items for cost of goods. And underneath that, you see gross margin. Well, this is how it works. Revenue is the amount of money you made. It is not the net income that you bring home. It's the amount of money that the business made minus the cost of goods, which gives us our gross margin. We have to subtract the cost of goods from the actual total sales or revenue to get to the gross margin. So we will use the $297,500 to begin the expenses of our operating expense, which are indirect cost. Basically, we subtract 500,000, which is the total sales, from the cost of goods, which gives us $297,500. So the indirect cost, or the operating expense, is used to run the actual business, consists of multiple things, such as utilities, the rent if you're renting a property for your business, unapplied labor that's not associated with direct cost of converting the raw resources into a product. If you use linens service supplier for your business, depreciation, all those things are expense out from the business and must be subtracted from the gross margin. We still have not gotten to the net income, the monies that you take home. So the first thing we have to do is begin to identify those expenses that we're spending to operate our business to determine the cost of our operations, or a better word is operating expenses. In this example, our total operating expenses are $195,000. Now, that is not what we take home. So we must subtract our total operating expenses from our gross margin. And on this one, our gross margin again is $297,500. And our total operating expenses is $195,000. We must subtract that from the $297,500 to get to our net income, but not necessarily our net income. I'll explain. So based on these subtractions, we ended up with $102,000. That's subtracting the gross margin from our operating expenses. Again, we ended up with $102,000. So we still haven't gotten to the amount of money that you made, you profited from the business. We still haven't gotten to the net income. On this one, it shows that the net income is $102,000, right? But this is not totally correct. There is earnings before income taxes that has to be taken out. Now, if it's the end of year and you're operating in LLC, a single member LLC, or if you're operating in S Corp, there is a 21% tax that has to be taken out from your operating expenses. So if we look at 21%, that will give us, if we divide 21% into $102,000, that will be exactly $21,525. We have to subtract that from our net operating expenses, which will give us, to ensure that we are taking care of our taxes and paying Uncle Sam his or her actual taxes. That will leave us with $80,975. Again, that will leave us with $80,975. That is the amount of money, if it's the end of the year, as you pay your taxes, this is the amount of money that you will walk away with. $80,000, again, $975. We have to do better in understanding our business financials as small business owners. This is no knock at a CPA or a bookkeeper. They are necessary, but we have to be cognizant on our own financials, how to interpret them in order to make better business decisions week after week after week. We also must review our financials weekly. We must dedicate at least 30 minutes a week to our business financials so that we can make decisions for each week going forward. Hopefully this was helpful. Again, I am Dr. Mario Wallace. Please take your time, review the information in this video, and if you have any questions, please inbox me or leave a message in the comments. Peace.